Hello, Chartered. We are here for CA final FR revision. So, today we are going to do Ind AS 20 government grants. This Ind AS was there in your inter also. It's a very simple AS. So, government grant. So, we'll first understand the meaning of government grant, types of grant, and their accounting. Correct? And if you have received the grant, it can be refunded also. So, how to account for refund? So, you are supposed to learn what is government grant, types of government grant, how to account for receipt of government grant, and how to account for refund of government grant. Am I clear? So let's start. You can see notes on your screen. Government grant. What does the word government mean? Government means central government, state government, local bodies, international bodies, any NGO which is giving you grant. Correct? Grant can be in cash or in kind. Now grant word is explained that government gives us grant also and assistance also. What's the difference between grant and assistance? Assistance is providing economic benefit to specific society or industry. Grant is to a specific company, but assistance is to specific industries. I hope it is not only for a specific company, but it is for a specific industry. For example, if grant is in cash or kind, for example, free Wi-Fi, free medical insurance, no tax will not take, but free Wi-Fi government is providing, or land at cheaper rate, or free medical insurance, correct, to a particular sector. That means government in Bangalore started a concept that in Whitefield area, if you start a, what do we say, IT company, then Wi-Fi is free and there is a free medical insurance for all your employees. Correct. So this is a government grant which can be measured in terms of money, and hence this shall be accounted as government grant, although it's a government assistance, not to a specific industry, not to a specific entity, but to the industry at large. But chartered, if it is a facility which is provided by the government but which cannot be valued in terms of money, which you cannot find out the value associated it, then we'll not account for it, but we'll just write in our notes to accounts, we can write what are the helps we got it from government. Like example, it was becoming very popular that ease to do business. The facilities which government are providing for ease of doing business are obviously definitely an assistance by the government, but that ease of doing business cannot be quantified in terms of money. Excuse me. Example, single window clearance, speedy paperwork, 24/7 electricity, high speed internet. All these facilities government is giving us, but this cannot be quantified in terms of money. Correct? So only disclosure is required. So again, I make you understand, government means any state government, central government, local bodies, international bodies, any NGO which provides you assistance or grant, that is benefit of economic resources. This government assistance and grant, let's bifurcate them. First, let us understand what is assistance. Assistance is something, a benefit given by the government to a specific industry. Correct? Now, the benefit which is given by the company, given by the government to the specific industry can be bifurcated into two large parts, whose economic value can be determined, whose economic value cannot be determined. Whose economic value can be determined is free Wi-Fi, free electricity, or electricity up to certain units of consumption is not there, free insurance for all your employees, correct, or payment, suppose you have 20% of your salary would be given by the government, subsidy, whatever we say, these are nothing but government assistance. Am I clear? That is not provided to any specific entity on fulfillment of a condition, but this is provided to the industry at large. Like now it has come employee linked scheme, ELI, employee linked scheme. That means government will pay first year 1 year ka employee cost for you. So that can be valued in terms of money, and that should be accounted as government grant. On the other hand, if the government is giving a services which definitely helps business, or it makes our business process easy, we cannot account them. For example, I'll tell you, free Wi-Fi, high speed internet, single window clearance, Now government is building this huge infrastructure. Initially, I used to take 3 hours to travel from Mysore to Bangalore or Bangalore to Mysore, vice versa. But because of good road network, now I can travel in 1.5 hours. So definitely it saves my time, it saves money. But can I account this? No. So there are a lot of facilities government infrastructure is building. These are assistance by the government. Correct? So these cannot be accounted, only disclosure is required. Understood? Now let us understand what is grant. Grant is a transfer of resources to an entity, not to a specific industry, but to an entity. If they have complied with a certain condition, on compliance with past or future conditions. Past or future conditions means, for example, if I tell you, you will get a scholarship in your CA foundation if you get 95% in your 12th. So this is a past condition. Secondly, you will get 75,000 cash prize if you have got rank in CA final. So there is first fulfillment of condition and then you will get the money. Third, I can tell you, you are running an NGO, so government gives you money to give, and that money should be used for distributing food to poor. That means you get the money first and then you are supposed to distribute food to poor, blankets to poor, or you can say medicine at a cheaper rate, or education to poor. So that means first you got the money and then you are supposed to use that money and fulfill a condition. Government gives you a land to construct a hospital. Correct? Government gives you a machinery to produce clothes for poor. That means first government gave you the grant and thereafter certain restrictions are imposed on how that grant should be used. Correct? So there are two types. So again, let me summarize government, grant and assistance. What is government? You understood. Assistance, grant. Assistance is a economic benefit which is provided by the government to a specific industry, which can be valued in terms of money, which cannot be valued in terms of money. Which can be valued in terms of money should be accounted as government grant. Which cannot be valued in terms of money should be disclosed only. Government grant is a transfer of resources. Grant is a transfer of resources by the government to to a specific entity on fulfillment of certain conditions, either past or future conditions. Am I clear? For which I have given you examples. Government grant can be in three ways: cash, kind, or in terms of loan. Loan matlab sir repayable, relax. Loan. So this is what is government grant. Now, when to recognize government grant? The standard says that it should be recognized on accrual basis. I'll come to a practical aspect of it. Grant should be recognized on accrual basis. Accrual basis means when conditions relating to grant are fulfilled and when the grant is sanctioned. That means there is a certainty of collection. Like government told that 100 people, only 100 students who got 75% plus in their 12th standard, government will fund them for their CA preparations. So 75% you got, so you have fulfilled the condition. But when you deposit your form is 98th. That means your grant will be sanctioned. But if your form is 102nd, then your grant will not be sanctioned. Why? Because it is only for first 100. Or government meant say top 100 students. So you don't know which are top 100. You just submit your application. If you are in the list of top 100, you will get the grant, else you will not get. So over here the standard says there are two. First, you have satisfied the condition. Secondly, the sanction is done. That means there is a certainty of collection. That means you can accrue if you know that the money is going to come. Am I clear? So the grant is sanctioned. But in reality, chartered, I have generally seen, and when you see accounting also you'll come to know, that government grant is accounted in reality on cash basis only. That means you account for government grant when you receive. Because sanction letter you get and then you get a check. So there is hardly any time frame. So people after getting the sanction letter, they don't accrue government grant in the books. They accrue government grant in their mind. So they plan accordingly. But they don't accrue government grant in the books of accounts. They account for government grant first time when they receive it. Am I clear? So you understood the meaning of government, you understood the meaning of assistance, you understood the meaning of grant. And when to recognize government grant, that also you understood. According to the standard, it should be recognized on accrual basis. Accrual basis means you have satisfied the conditions, fulfilled the conditions for receiving grant, chartered, and the grant is sanctioned. Am I clear? Yes or no? Yes, sir. Now let's providing economic benefit to the specific society or industry in cash or kind, free Wi-Fi, free medical insurance. Since there is cost savings which can be measured, therefore it should be accounted as per Ind AS 20. No value associated, single window clearance, PD paperwork, 24/7 electricity, high speed internet. Only disclosure is required. Transfer of resources. Transfer of resources to an entity after compliance of past or future conditions. It can be given in three ways. Recognition criteria on accrual basis when conditions relating to grant are fulfilled, when it is sanctioned. Now chartered, accounting for grant. I told you grant can be given in cash or in kind or loan. Now chartered, let us understand this. Correct. Now, first suppose it is cash. Cash may you are going to receive government grant. Then chartered, first entry, when you receive the grant, you pass the entry bank account debit to government grant. Then you transfer government grant to deferred grant. Correct. Then you transfer deferred grant to PNL. That means deferred grant should be transferred to PL either immediately or it should be amortized over a period of time. Anything. Sir, why this first receive then transfer it to deferred grant and then? So you have received it. This government grant you have received is you first transfer it to deferred grant. A special account you create. Correct? And that deferred grant appears in your balance sheet or P&L. Am I clear? Why we transfer it to deferred grant? We can directly do it also, but institute prefers to do accounting through this entry. So bank to government grant to deferred grant. This deferred grant can be immediately written off to PL or amortized over a period of time. This principles of amortization are dealt later. Now chartered, let's assume that you received 100 rupees. So 100, 100, 100, 100. And let's assume over a period of time we have transferred 40 to PL. Now government says refund this 100 rupees because you could not fulfill the conditions. They had told you that you are supposed to use this money. You are supposed to use this money for education to poor. But you are using this money for education to neighbor. Will it work? No. If you would have got 75%, then only you are eligible for CA foundation free. But you got 74.9 and you applied and the government sanctioned. Later on they realized, shit, there was a mistake because 74.9 you had rounded off to 75%. So government told you now you have to refund the grant because you did not satisfy the condition. Am I clear? So now you have to refund. So how much you are supposed to refund? Sir, I am supposed to refund full 100 rupees. तो मैंने 100 rupees credit कर दिया. I credited 100 rupees. Now I should debit what? How much I have already transferred to PL? 40. So I'll debit PL with 40. That is amortized part. This is amortized part. 40 is in your PL. DG में how much is left? 60. 100 minus 40. 60 is left. So DG account debit 60. That means amortized part you will debit PL and unamortized part you will debit bank. Am I clear? Yes. Now chartered, you have received an asset. You have received an asset. Asset. So PPE account debit. PPE account debit 100. Now this asset can be entirely free. Then you will write to government grant entire 100. Or if you would have paid some money then to bank. It can be at concessional rate also. So if you have paid 20 then 80 rupees is government grant. That means you got the asset at a concessional rate. Am I clear? So if you would have got it at free, then it would become PPE to GG, government grant, entire 100. And if you have paid 20, then account it like this. Then second entry is same, GG to DG. Then again DG to PNL, principles of amortization dealt later, refund entry same. Am I clear? Now charted, there is loan. Loan is of two varieties. One is forgivable loan. That means you don't have to refund the loan. So first you write bank account debit to GG, then GG to DG, this is loan. Then again DG to PNL. Sir, entries are same, correct. And refund again, same. So this is forgivable loan. That means government would forgive the entire loan if you have satisfied 100% conditions. Am I clear? Now, loan at concessional rate. That means market rate of interest is 12%, but government has given you loan at 4%. That means you got the loan at 8% cheaper. So how much is government grant? So first we'll apply the principles of financial instruments 109 to find out the amount of government grant. How to find out the amount of government grant? Loan received. Suppose 100 rupees. You are going to repay the loan in 5 installments. So present value of cash flows at market rate of interest. Present value of cash flows at market rate of interest at 12%. That means 20, 20, 20, 20 you are returning. So whatever you are returning, if that same money, if you would have returned, so for example, you are returning 20, 20, 20, 20, 20 and 20. So 6 times 20 rupees you are giving, returning back, and your loan as well as interest is covered. So if the same repayment was done, but this repayment covers how much? 4%. Suppose same repayment was done and the rate of interest was 12%, then probably you should have got loan of 70 only. At market rate of interest, you should have got 70 only. Are you understanding? Yes, sir. That means at market rate of interest, your repayment schedule shows that you should have got loan of only 70. At market rate of interest, or your repayment schedule shows that you should have got loan of only 70, but you got a loan of how much? 100. So 30 rupees is government grant. Am I clear? You would have studied financial instruments mein loan given to employees at concessional rate. So there we used to consider the difference like this as employee benefits. Over here we consider it as a government grant. So after you do it, then you say bank account debit 100 to loan actually is how much? 70 to deferred grant 30. The deferred grant 30 ka accounting is same, and this loan ka accounting is done as per amortized cost method, which we do it in ACM. Amortized cost method, that means 70 plus interest minus installment gives you closing balance. Then that closing balance will become opening balance plus interest minus installment, and it will go on. Amortized cost method of financial instrument. Understood, chartered? Yes or no? Now let's go through the accounting which is given over here. Accounting for government grant, cash, bank to government grant. Yes, sir. Then government grant to deferred grant. Okay. Then deferred grant to PL. Okay. DG is amortized, principles of amortization dealt later. Refund, unamortized portion, deferred grant, amortized portion, PL. If you would have got asset, then PP account debit fair value. If it is entirely free, then this bank will not come PPE to government grant. But if it is available at a concessional rate, that means whatever amount you have paid to GG, balance is government grant. That means 100 rupees ka asset, you have paid 20. So remaining 80 is your grant, then same. BCD is same. Forgivable loan, that means you don't have to repay the loan. Bank to government grant loan, government grant to DG, same. Concessional rate. Apply Ind AS 109 ACM, amortized cost method, which we study in financial instruments. Loan received less present value of cash flows at EIR. effective interest rate, that is market rate of interest. That means present value of whatever installments you are giving, including interest. If that same installments you paid, but the interest was market rate of interest, then you would have got lower loan only, because 100 rupees ka loan, 100 rupees ka loan at 4%, you are repaying 20 rupees 6 times. But at 12%, obviously, you would not have paid 20 rupees 6 times. So, if you are paying 20 rupees 6 times and the rate of interest is 12%, you would not have got 100, you would have got less than 100. Say, suppose you would have got 70, then 30 rupees is treated as government grant chartered. Simple. Correct? So, bank to loan to GG. GG is financial liability, which will be accounted as per ACM, and government grant entry number BCD is same. Now, the next important part. So, this is as far as accounting is concerned. Now, presentation. Deferred grant will appear in balance sheet under non-current and current liability. The portion which you are going to amortize next year will come as current liability. Remaining will come under the head non-current liability. Am I clear? The amortized portion which you have transferred to P&L. The amortized portion which you have transferred to P&L, that will come in P&L under the head other income. Am I clear? GG received in cash will come in cash flow statement also. If you have received the money for PPE, then it is known as financing activity. As loan, then financing activity. For expenses, then operating activity. Am I clear? So, sir, 5,000 ka loan we have received, correct. 1,000 I have amortized, that will go in PL, other income, very good. 4,000 will go in balance sheet, correct. Balance sheet liability, correct. Out of that 4,000, 1,000 I am going to amortize next year. So, that 1,000 will come as current liability, wonderful. And the remaining 3,000 will come as non-current liability, absolutely. 5,000, correct. So, this entire 5,000 you have received for PP. So, it will come in cash flow statement as financing activity, correct? Yes, sir. Now, charted out of that 5,000, 1,000 you have amortized, correct? So, it will be transferred to P&L credit, other income. Very good. Remaining is how much? 4,000. Out of this 4,000, 1,000 you will transfer to PL next year. So, this 1,000 will appear as current liability. Remaining 3,000 will appear as non-current liability. Very good. See, I have given that example also. Government grant received 5,000. Amortized over a period of 5 years on SLM. Received 5,000 cash flow as financing activity or operating activity as the case may be. Out of this 5,000, amortized 1,000 in P&L as other income. Unamortized 4,000 balance sheet mein jayega. To be amortized next year, that will come as current liability. Remaining 3,000 will come as non-current liability. Amortization principles. This is very, very important. Correct? Now, you have received cash. You have received cash. Cash you have received for asset. Then DG should be amortized or should be written off in P&L. You have received cash for asset or other cash for depreciable asset. Then DG should be amortized in PL or should be written off in PL over the years in the ratio of depreciation. DG should be written off in the ratio of depreciation. If it is non-depreciable asset, if it is for non-depreciable asset without any condition, then it should be, suppose you are constructing a temple. Government saw that and government gave you loan. Government gave you money. So there is no condition attached to it. So that money you can immediately transfer it to P&L. But if there are conditions attached to it, that you are buying a land and you're supposed to construct a hospital or you're supposed to construct a school, then that DG should be amortized in SLM over the construction period. Am I clear? That means, now listen, you are buying a land. Government came to know that you are buying this land for temple. So government gave you a grant. No condition attached. Transfer it to PL immediately. You purchased a land. You are constructing for hospital. Correct? The government gave you a grant but told you this is for construction of hospital only. Now, chartered, you took that grant until unless the hospital is constructed. Suppose hospital got constructed over a period of 3 years. Then government grant should be amortized over a period of 3 years. Now, chartered, third, they told you that land ke liye I am giving you a government grant, and this government grant say you are supposed to construct hospital and that hospital must run for at least 5 years. So you thought construction period 3 and 5 years minimum I am supposed to keep it as hospital, the total period 8. So that government grant should be written off over a period of 8 years. Am I clear? Without any condition, write it off immediately. Condition to construct something, then over the construction period. Condition to construct and maintain it for n years, then construction period plus n years we are supposed to write off the government grant. Correct? Depreciable asset should be written off in years. Non-depreciable asset, without any condition, write it off to DG immediately. With condition to construct, write off DG to PL over construction period. With condition to construct and maintain it, then write off DG to PL over n years in SLM or in the ratio of depreciation of constructed asset. Am I clear? Yes, sir. Now chartered, they have given you government grant for expenditure. That means government had told that if in your school the pass percentage is 80%, your entire year ka electricity bill government will bear. So entire year you paid all your electricity bills. Correct? Yes. Your school got a result of 95%. Correct, in 10th standard. Now government is supposed to pay for your entire year's electricity bill. Yes. So whatever actual electricity bill you paid, government reimbursed it because you have fulfilled the condition. So condition was past or future? Past. So you got the money, that money should be immediately transferred to PL. Without any condition, write off DG to PL immediately. Correct? Yes. Now, government gave you a grant stating that your 100% employees should be female and they should be there in your organization for a minimum period of 1 year. So you employed females only, you gave them salary for entire year, and after 1 year you have satisfied the condition, you have only employed females and they were there in your organization for 1 year. So past condition is fulfilled. Now government gives you money or reimburses the entire salary which you have paid. So that condition is fulfilled, you will write off that government grant to P&L immediately, chartered. Am I clear? Yes, sir. Condition fulfilled in past, same, immediately. Without any condition, immediately. Condition to incur expenses in future. That means you are supposed to use that money for some purpose, for creating jobs, for skill development. Correct? So that money you are supposed to use for creation of jobs or for skill development. Correct? Then chartered, as and when you incur expenses, write off DG to PL in ratio of estimated expense on or SLM. SLM is better. Every year you write off little. In PL as other income or less from expense. So when you are writing it off, either you can subtract it from expense or you can write it in P&L credit, chartered. Am I clear? So if you get a grant for expense without any condition, correct, then you will write it off to P&L immediately. Correct? No conditions attached. You are a temple, government give you donation. Write it off to PL immediately. No condition. Government gave you donation. Government gave you donation because you had spent money for XYZ program, which you have already done. So you have already fulfilled the condition. Then also immediately transfer it to PL. Government give you donation for providing food to poor. That means that money you are supposed to use in providing food to poor. Correct? So that money should be written off in the ratio of estimated period of expense. Am I clear? Suppose government has given you 1 lakh and you feel that 1 lakh, say I will be able to provide food to poor for 2 years. Then you should write off that 1 lakh over a period of 2 years in the ratio of expense or SLM equally. Equally is a better option. When you are writing off to P&L, you have got two options. Either you write it in P&L credit and show it as other income, or you subtract it from expense, chartered. Am I clear? We will show it in P&L credit. That's a better option. Okay. Now chartered. Forgivable loan. Write off to PL in one lump sum when forgiveness conditions are fulfilled. Loan will be forgiven only if you have fulfilled the conditions. You have fulfilled the condition. Transfer. Government does not ask for refund. Government says, I will give you loan. Loan per interest will be 12%. Okay. But this money you should use in construction of school. Correct? You did not use the money for school. Then the government says, okay, repay the loan along with interest. Correct? or government said you should use it for construction of school. You construction the school, that means you have fulfilled the condition, then you will transfer that entire grant to PNL, deferred grant to PNL as soon as the conditions are fulfilled. One, now government give you loan at concessional rate 12%, but government is giving you 4% because you are starting a factory in special economic zone. Then write off to PL in the ratio of interest, SLM, or immediately, it is your choice. Want to write it off over a period of time, or little every year, or together, bum. Choice is yours. SLM is the better option because if it becomes refundable, you are not hit badly. Correct? Now, what is the difference between loan and government grant? Loan is we want to do something and ask money. Government grant is government wants us to do something for which they gave money. So I hope the difference is government loan and government grant. It is the difference you understood. If government grant is received as an asset, then DG should be written off. You got asset as a government grant. Then DG should be written off to PL on the principle of depreciable or non-depreciable asset. So either government give you cash for asset or government give you asset. Either government give you cash for asset or government give you asset. So when government gave you asset, the journal entry would be what? Asset to GG, then GG to DG, then DG should be written off to PL in what? The same principles. Am I clear? Yes. Now chartered, this is also very important that government grant does not include price protection, income tax benefit, minimum MSP. Correct? Or suppose government says you would have sold this for 10 rupees. Correct? But please you sell it for 2 rupees, remaining 8 rupees I will give you. This is known as price protection. That price protection, like COVID ka vaccine, we got it free, but government would have paid money to the vaccine companies, So that was a price protection given to vaccine companies. 1 rupee mein rice. So remaining who are paying money to the farmers? Government. That is price protection. Income tax benefit. Special economic zones. Government participation in ownership. Government participation in ownership. That is government contribute as a partner. So that is capital only. So that is not considered as government grant. This was considered as government grant. Promoters contribution bolke. This was considered as government grant in your AS. Promoters contribution. Over here it is not considered. Over here grant will hit your PL either today or tomorrow. But promoters contribution wala grant never hits your PL as per AS. You used to transfer it to capital reserve and there was a condition that you cannot pay dividend out of this capital reserve. That fundamental has been removed from Ind AS. Am I clear? Yes, sir. For agriculture, government grant for agriculture is covered in agriculture standard only. Now chartered, government gave you money to purchase asset at a concessional rate. Then you have got two options, gross method and net asset method. Now, government grant for PP you received is 20. Purchase plant and machinery for 100 rupees and life of plant and machinery is PP is 5 years. Refund of government grant after 3 years. Now chartered, you purchased PPE for how much? 100 rupees. Government gave you how much? 20. The 20 you transferred to DG. Correct? Now, this 3 years तक 3 years के बाद refund हुआ तो 3 years तक you went on depreciating the asset. 1 year का depreciation 20 rupees, 3 years का 60 rupees. So every year depreciation to PPE 20, depreciation to PPE 20, depreciation to PPE 20. So depreciation to PPE 60 rupees you have already passed. So now 20 rupees which you had transferred it to DG, that also should be written off or amortized in PL over a period of 5 years. So 20 rupees if you amortized in PL over a period of 5 years, that means each year you are supposed to write off how much? 4 rupees. So 3 years mein how much you are supposed to write off? 12 rupees. So amortize government grant for 3 years, that is 20 divided by 5 into 3 years 12. So DG to PL. How much government grant you had to receive? 20 rupees. Now that becomes refundable. So 20 rupees you are supposed to repay. Out of that 20, how much you have transferred it to PL? 12 rupees. So 12 rupees is amortized. 8 rupees is unamortized. Amortized is PL, unamortized is government grant. Am I clear? Yes, sir. That means in your balance sheet, asset and deferred grant will appear separately. But in net, PPA to cash, cash bank to DG, GG to DG, then you pass one extra entry. DG to PPE. That means your PPE will now appear at 80 rupees. In the first case chartered, in your balance sheet, asset side में 100 rupees का asset was appearing and liability side में 20 rupees का deferred grant was appearing. Over here, deferred grant, you have set it off against PP and PP is now appearing at 80 rupees. 80 rupees for a period of 5 years. So each year, how much you will depreciate? 16 rupees. 3 years, how much you would have depreciated? 48 rupees. Now refund जब करेगा तो 20, how much you have transferred it to PL? 12. How much is in PP? Unamortized. Instead of DG, it will become PPE. Correct? So 20 you are refunding. How much you have amortized? Sir, amortized is 12 rupees. That will come in PL. How much is unamortized? That is 8. Where is that 8? PP. So PPE debit 8. Am I clear, chartered? Yes or no? Yes. Now, chartered, to summarize, we studied the meaning of government, then we studied the meaning of assistance, which can be valued in terms of money, which cannot be valued in terms of money. Valued in terms of money, accounted as per government grant only, and cannot be valued in terms of money, should be disclosed. Government grant can be of 3 types: in cash, in kind, in loan. If you have received government grant in cash, for what purpose? A. For the purpose of depreciable asset, then government grant should be amortized to P&L in the ratio of depreciation. For non-depreciable asset, without any condition, write it off immediately. For non-depreciable asset, to construct something over a construction period. For non-depreciable asset, for construction and to maintain that construction for few years over that total period. Am I clear? If you have received government grant for asset, for expense without any condition, write it off to P&L immediately. You have got government grant for expense and the conditions have already been fulfilled in past, then write it off to P&L immediately. But expense you are supposed to incur in future, then write it off in the ratio of estimated expenses or SLM over the period in which you believe you will incur expenditure. If you believe you have got a government grant of lakh rupees and this lakh rupees you will spend over a period of 4 years, then in 4 years you are supposed to write off this lakh rupees. In which ratio? In the ratio of expenses or equally over a period of 4 years. Equally over a period of 4 years is the better option. If you have received free loan, then to same as cash. But if you have received loan at concessional rate, then you have to find out government grant. That means loan received minus present value of your installments at market rate of interest. So your repayment schedule at market rate of interest, you are supposed to discount it. Correct? Because if you would have got loan at market rate of interest, then your repayment schedule would have given you lesser loan. Your loan was supposed to be 200. You got a loan of 200. But according to your repayment schedule, at 4% interest, no, but market rate of interest is how much? 12%. That you discounted at 12%. Then you find that you should have got a government loan of only 120, but government gave you a loan of how much? 200. So your repayment schedule and rate of interest के हिसाब से you got a loan of 200, but at market rate of interest at the same repayment schedule would have given you a loan of 120. Then 80 rupees is government grant. Loan you will account as under ACM as per financial liability 109 Ind AS, and government grant you will account as per government grant. Am I clear? Now, if you have got government grant to purchase asset at concessional rate, then you have got 2 options. Now, before that, if you have got asset as a government grant, this was cash wala drama. If you have got asset as a government grant, then what will you do? Then same principles for depreciable and non-depreciable. Am I clear? Now you got a government grant that to purchase asset at a concessional rate. So government gave you, so you first purchased the asset, then you got the grant. You can show the asset and the grant separately, or you can set it off. Am I clear? Then your asset will appear at net asset, and net asset you will keep on depreciating. So when you are refunding, you write DG unamortized, PL amortized to bank, but instead of that DG you will write PPE for unamortized part because deferred grant is transferred to PPE. Am I clear, chartered? Yes or no? Yes, sir. So with that we come to end of government grant chartered. All the best. See you in the next video with the next standard. Till then, bye bye.